I'm John Persinos, Editorial Director of Investing Daily. Welcome to my video presentation for Monday, November 14. To view our full range of trading services, visit our website at investingdaily.com. Also visit the website of our subsidiary, streetauthority.com. My question for today: can you trust Wall Street's CPI-induced bullishness? The U.S. Bureau of Labor Statistics last Thursday released a cooler than expected Consumer Price Index CPI report for October, and the data spawned euphoria on Wall Street. Contrarian investors, such as myself, are usually skeptical about extreme mood swings. Indeed, some analysts have dismissed last week's rally as a ridiculous overreaction to the CPI data. But I beg to differ. Sometimes good news is just, well, good news. Let's parse the numbers. Month over month, the headline CPI increased 0.4% versus estimates of 0.6%. The core CPI, which excludes the volatile food and energy components, climbed 0.3% compared to expectations of 0.5%. Over the past 12 months, the all-item CPI increased 7.7% in October compared to expectations of 7.9%. Core CPI in October came in at 6.3% over the year compared to expectations of 6.5%. Placed within the context of the last 4 months, the October CPI reflects a downward trend. The good news on inflation is tangible and not a mirage. A mending supply chain, slackening consumer demand, and excess retailer inventories are all fueling a pronounced slowdown in goods inflation. At the same time as the labor market stays tight and wage growth slows, services inflation is stabilizing. In a separate report last Thursday, the U.S. Department of Labor showed that in the week ending November 5, the advance figure for seasonally adjusted initial claims was 225,000 versus 220K expected, an increase of 7K from the previous week's revised level. Jobs growth remains strong, but it's decelerating, which is disinflationary. In response to the CPI and job reports, stocks soared and Treasury yields declined. After a powerful two-day rally Thursday and Friday, the major equity benchmarks closed out the week with hefty gains. On Thursday alone, the Dow jumped about 1,200 points. The stellar week racked up by stocks last week was a reminder that the number one story driving equities is inflation and Federal Reserve policy. As Wall Street starts to expect a less hawkish Fed, the Treasury yield closed last week below 3.9%. Oil prices fell last week as China's strict COVID policy stoked concerns about global economic growth, although on Friday, Beijing did announce that it would partially ease quarantine rules. The price of crude oil hovers below $90 per barrel, despite the latest production reduction announced by OPEC+. Weighing on oil prices are persistent concerns about China's economy, which just goes to show that the cartel only has so much power over the dynamics of global energy trading. Saudi Arabia and Russia wanted to punish the Biden administration by pushing up oil prices just before the midterms. It didn't work. As we all know by now, the red wave on November 8 in the midterm elections, it simply didn't happen. The incumbent Democratic Party defied historical precedent, as well as expert predictions, to put in a shockingly strong showing in House and Senate races. The Democrats also performed well across the board in gubernatorial and other state-level races. The votes are still being counted, and which party gets a majority in the House remains up in the air. But on Saturday night, the Democrats clinched Nevada and retained control of the Senate. The GOP pushed inflation and crime as political issues during the elections, but most voters were instead motivated by abortion rights, as well as a general disdain for election deniers. But remember this: Wall Street doesn't care all that much about the midterms. It really doesn't. The investment class hates radical change on either the left or right. Gridlock suits Wall Street just fine. Now let's look at the week ahead. Here are the major economic reports on the docket this week that have the power to move markets and warrant close attention. Fed inflation expectations Monday. Producer Price Index, the PPI, and household debt Tuesday. Retail sales, industrial production, and home builders index Wednesday. Initial jobless claims and housing starts Thursday. Existing home sales and leading economic indicators Friday. The most important data, of course, will be the latest PPI reading. If wholesale prices confirm the trend reflected by the CPI, we'll probably witness another upward catalyst for stocks. In the meantime, which industry was the big winner in the midterm elections? Marijuana. That's right, marijuana, which won legalization via ballot initiatives last Tuesday in Maryland and Missouri. That's why I just launched a brand new service detailing how you can financially benefit from the legalization of cannabis. Called Marijuana Profit Alert, it's your guide to making money in these challenging times. For details, click the URL at the bottom of the article that accompanies this video on the Investing Daily website. Well, that's it for now. Thanks so much for watching.